we have the current stock market update for Intel Corporation, stock ticker INTC. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So as we can see here, share prices are overall starting to roll over a bit after forming some fairly significant near-term highs coming in at 24.66. Those were significant highs because what we've seen more recently is a weaker high that is posted near 23.80, and this does sort of suggest that we could be in store for a bit of a further decline here going forward. Currently, the support zone that we're watching has moved down a bit, and the near-term lows are currently coming in at 21.58. So we're seeing sort of a bit of a trading range here that is starting to develop, but it is looking very heavy at the moment. So it might be a bit generous to call this a sideways trading range because most of the activity is being seen to the downside, and for the most part, we are starting to see some lower lows as well. So this most recent movement into 21.58 did break through the support zone that was seen right around this would be 21.74. So it is a slight difference here. Let's just mark that in. So here overall we can see that there are some different differences in the share price levels that are being seen. So this is a sequence of lower lows, and then we're also seeing a sequence of lower highs as well. So this near-term high is something that will need to be watched because, in my view, what we're going to need to see in order to sort of turn this around a bit here will be a break of 22.88. That would be sort of this area here. We'll just mark that in quickly. So in order for us to break through this sort of sequence of lower highs that has been developing, I do think that we will need to see a break of 22.88 because we're sort of getting a bit of a descending triangle type of pattern here. I mean, it's a bit ugly and it's very weak looking because this is really a sequence of lower lows. It's really both lower highs and lower lows. But this is significant because for the most part we're really trading at the bottom of this descending triangle pattern rather than sort of in the middle of it. So for me, like what I would need to see at the moment would really be a break of this 22.88 area. If we do see a break above that price zone, I do think that you can start to expect some pressure to be taken off of the downside. Quickly here, we will look at the indicator reading just to see what sort of signals we can find here. And currently what we're seeing is a fairly strong momentum reading in the negative direction. At the moment, there really isn't much that's pointing to bullish momentum. We really can't see much unless you really want to go short term here and look at sort of this area here. But the positive here is that we're also seeing a bit of a bullish divergence, bit of a bullish divergence type of condition. The reason that I say that is because if we look at these prior two lows here, 21.74 and 21.58, we can see that those obviously are lower lows. But if we look at the indicator reading here, this is not being confirmed in the same manner. So we've got lower lows in share prices, but we've got higher lows in the indicator reading itself. So this is a bullish divergence, and this is probably the most positive signal that I can currently see on this price chart because everything else is looking very heavy at the moment. So this will be something to watch here going forward. This is a very short-term reading, but the encouraging part of it is that the relative distance between the highs and lows here suggests that this could be a bullish divergence in the works. We will need to see share prices move higher, though, in order to break this negative momentum. And overall, I do think that a break above this 22.88 area would be fairly significant. I think that we would then be able to remove some near-term resistance, also remove this downtrend line that has developed here. And then a third factor would be the idea that we would then be removing this momentum reading that's showing in the bearish direction. So, that it would be a fairly significant break to the top side, even though it's not a huge distance away. I mean, we're talking about 60 cents or so at the moment. So it really wouldn't be a major price movement in terms of price distance. But I do think from a technical perspective, I do think that you would be sort of removing a lot of bearish signals from the market if we did see a break above that 2288 area. So just quickly, just to close out the video here, I will look at some possible lower areas just in case we do start to see more of a continuation here with these lower highs and lower lows. So, currently what I would be looking at first would be the 78.6% Fibonacci retracement zone, which currently comes in right around 2130. So the way that we're arriving at this figure here would be for us to sort of draw a line here from 2040 to 2466. So if we're looking at this trend wave movement here, we can see that we've already retraced most of that price movement. We have already fallen through the 38.2% and 61.8% Fibonacci retracements. So this is significant because there's really only one more Fibonacci retracement zone that's left, and that would be the 786. And that currently comes in at 2130. So, currently we would have to lose about another $1 in share price action in order for that downside break to occur. But we do have to keep in mind the fact that there really isn't any other support in this area. There isn't really any historical support in this region. There are no exponential moving averages on the hourly time frame. So it's really just that Fibonacci support zone on its own. So, it can hold, but personally I prefer to have a confluence of technical indicators that are pointing into the same region in order for me to, have enough confidence in a position in order to actually execute a trade. So, we're not really seeing that at the moment. Currently, this really is just a Fibonacci zone alone and nothing else. So, currently, a break below 2130 would then suggest that we would be in store for a full retracement lower, and then that would suggest that the next price low would come in at $20.40. So then obviously at that point we would be in very close proximity with that $20 psychological level. So here's the current stock market update for Intel Corporation, stock ticker INTC. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.